So I'm really so happy to have everybody here today. I want to thank Cerini Associates, Ken, Shari, and Kellyanne as well for helping to coordinate that. They're an absolute pleasure to work with, and they do so much for the nonprofit sector. So check them out when you can. So again, welcome to our friends at Cerini and Associates. Kenneth Cerini and Shari Diamond will be doing the presentation today. A reminder of NPW's new mission statement. We are here to strengthen you, and this is part of our effort to do so. We thank our series sponsors for allowing this program to happen and supporting this program to happen. We thank our business partners who believe that an investment in the nonprofit sector is a smart investment. We agree with them. So thank you for supporting and investing in us. And then to those of you who are not members yet, I always ask the question, why not? We are stronger together. We're doing so many wonderful things here in Westchester. So I encourage you to join. And now I am going to hand this over to Ken and Shari. And I do want to again remind you, please keep yourselves on mute. Pay attention. There's a lot of really important stuff happening, and ask your questions in the chat and I will be monitoring them, and we will do our best to get all of them answered. If not here today as a follow-up. So Ken, Shari, it's all yours. I'm going to stop sharing my screen.
So hey everyone, I'm Ken Cerini. I'm the managing partner of Cerini Associates, and I'm in charge of our nonprofit audit and consulting group. And I'm joined today by Shari Diamond. Shari, wave, there you go. Shari is the partner in charge of our internal audit division. So today, again, we're going to be talking a little bit about making your organization audit proof. Most organizations, especially health and welfare organizations, rely heavily upon funding from the government sources. That could be federal, that could be state, that could be local government. The funding can take the form of deficit funded, which is cost-based. It could be fee-based. It could be performance-based. So there's many different ways that nonprofit organizations get funded through government funding. No matter what form, though, that government funding takes, government funding comes with regulations, which, if you think about it, that makes sense. Now, unlike traditional for-profit businesses where you provide a service to somebody and the person pays you for that service, in this case, in the nonprofit sector, we provide services for others, and we're paid by a third party. That could be an insurance company, that could be the government. So the government really needs to make sure that the services are being properly provided, they were authorized, they were within the goals that were established, you're following regulations, the billing is proper. If there's cost-based, that the costs are appropriate and things are being properly allocated. So again, there's a lot of criteria that are in place that the government has, and they want to make sure all this is happening. So in order to accomplish this, the government relies upon you, the nonprofit sector, to put in place appropriate controls to ensure that you're complying with the regulations that have been established in order to verify that the controls that the regulations that the government has put in place are properly working within your organization. In order for the government to check that, they send in auditors. That could be from the governmental agency, that could be from outside agencies, like oversight agencies such as the New York State Controller's Office, the Office of the Medicaid Inspector General, the State Attorney General's Office. So they'll come in and they'll do these audits of nonprofit organizations. And really what they're looking to do is they're looking to see that you've got the controls in place and you're properly following regulations. The problem is that if things aren't working the way they're supposed to, and you don't have proper controls in place, that could result in takebacks by governmental agencies, which results in money, which is very precious to the nonprofit sector going back. Now, I know the topic today is making your organization audit-proof. There's no way that any organization can make themselves completely audit-proof. But today we're going to discuss some things that you can do in your organization to greatly reduce the amount of overall exposure you have. We have a lot of material, as Jan mentioned, to cover. There's 30 some odd slides in an hour and a half. We don't necessarily expect to get through every single slide or within the level of detail that you may want. The last slide that we have includes both mine and Shari's contact information. So if we don't get through everything and you do have questions that we don't get a chance to answer, hopefully we will, please just reach out to us. We're more than happy to answer whatever questions you have. In addition, we want this to be as interactive and as fluid as possible. So if you have any questions as we're going along, as Jan mentioned, please drop them in the chat and we'll try to get to as many as we can. Okay, so some of the goals for today and what we're trying to accomplish. We want to talk a little bit about who's interested in your operations, what are regulators focusing on, how you can tighten controls and compliance so that you can avoid those takebacks. We're going to look at some of the resources that are available, and we've given you some links to a lot of different resources that are out there. And then we're going to talk a little bit about compliance officers, compliance committees, things like that. And there's going to be some focus on some of the Medicaid compliance requirements. So Shari,
I just put in the chat. Hopefully everybody can see. We really wanted to get an idea of what role or title you have in your organization. And we have 5 different choices. In the chat, you can respond by just the number. 1 is a board or audit committee person, a member. 2 is the CEO or an executive director. 3 is the CFO, the controller. 4 is compliance officer, and 5 is other. If you would just take a quick moment so we can get an idea of who our audience is, we appreciate that. Great. All right, so a bunch of 2s, 3s, 4,
so Shari,
5.
want to talk a little about who's interested in the organization?
Sure, absolutely. So a lot of people are interested, as Ken mentioned before, because it really depends on where you're getting your funding. So obviously you need to have an external audit done to assess your financial health. And that tells a picture to certain people out there that might be interested in your financial activities. So when you think about borrowing money or getting a loan and what kind of rate you might be getting, that's a bank might be interested in that kind of information. So a lot of different things come out of an audit that can interface with other people that can impact your ability to function in an organization. And the list can mention some other organizations that you're getting funded by, including the New York State Controller's Office. You could be part of the New York City, IRS, don't forget about them, Department of Labor, they come in quite often. OMIG, the Office of the Medicaid Inspector General, that is a big one. Department of Health, banks, funding sources, watchdog organizations, and of course, donors or potential donors. People who might be looking at you from a financial perspective, do I want to donate to that organization? So you need to have your ducks in order in that way. Not to mention also other nonprofits who may be wanting to coordinate or do business with you. So it really impacts your organization greatly. Let's take a look at some of the answers. So I think we have a good smattering of different types of people, Ken, in the audience.
Good. Shari, you want to talk a little about the compliance and fiscal?
Sure. Well, this isn't kind of my world as an internal auditor. We're really focused on the internal operations of the organization. We really try to work collaboratively with our clients, and especially in the financial area, to be a resource to them. So it's a little bit of a different function. We're often known as the good auditors. And one of the questions that I kind of wanted to find out is like how prepared people are for an audit and what compliance. I'm going to put this in the chat real quick.
All right, well, Shari's doing that. I'll talk a little bit about what's on the screen then. When we think about the audits that are taking place, the thing you have to remember is the type of funding that you get is what's going to drive how the audit focus goes. So if you have deficit funded contracts, which are cost-based contracts, the focus of those deficit funded contracts is going to really be more on the costs and how you're accumulating costs within your organization. So they're going to be looking at the internal control environment that exists in terms of how do you ensure information is recorded in the correct account, amount, and period. They're going to be auditors are going to be looking at expenses. Are they reasonable and necessary? Purchasing procedures, are you getting appropriate bids and quotes out there based upon the regulations or based upon your own internal policies? If you have allocation of costs from a parent organization, are the allocated costs non-duplicative? So if I already have in place within my organization a controller, and now I'm allocating a corporate controller back down to this organization, Is there a reason why I need to have costs in there from both controllers? Can you justify, can you support that? Allocation methodologies are extremely important. The key on the allocation methodologies, you need to make sure that they're documented, that those allocation methodologies are consistent. Obviously, you want to charge expenses directly where you possibly can. But in the event that you can't, there's going to always be some sort of allocation, and those should be documented. Things like salaries. So if you are allocating salaries, how are you allocating salaries? Are you using time studies? Are you doing contemporaneous time tracking? Is there another method that you're using that is in place? Fringes, how are you allocating fringes back and forth? Are you allocating mandated and non-mandated fringes the same way? Are you using fringes as a percent of salary, or are you directly charging? Occupancy costs. Most of the time when you're dealing with occupancy costs, you're allocating those occupancy costs based on square footage. That goes for rent, utilities, repairs and maintenance. Supplies, how are you allocating the supplies? So there's a lot of costs that come into an organization, and part of your policy and procedures, you should be talking about what those allocation methodologies are within the policy and procedures. All documentation should be contemporaneous. So at the time that you're incurring the expenses, that's when the documentation should be taking place, not at the end of the year, when you're looking to try to move costs around. You should have underlying support for all of your expenditures. You'll hear over and over again when auditors come in, if it isn't documented, it didn't occur. So documentation is going to be extremely important. If you read through a lot of the reports that have been issued by the State Controller's Office, they've been doing a lot of audits recently of 4410 special education providers. One of the biggest things they find is that the underlying support for the expenditures, that documentation just isn't there. So it's going to be really, really important for you to maintain that documentation. A lot of the computer systems that are out there today allow you to actually attach the documentation to the transaction within your general ledger. If you can do something like that, that would be great, because then you actually have it attached to the transaction. Are you following regulations with respect to allowable costs? So if you get funded through any of the agencies that fund through the Consolidated Fiscal Report, the CFR, you know then that there's an Appendix X, which outlines what all of the allowable costs are. There are other funding sources, all have their own within the contract, what's allowable, what's not allowable. Just make sure that you understand, and whoever is within your accounts payable department, or whoever's approving things or making sure things are being allocated out to different places or different programs, understand what those allowable costs are. Because if you don't understand the allowable costs, you could be stuck in a situation where if you do have a cost-based contract and you have non-allowable costs in there, they're going to be disallowed. Again, understand your related party transactions. If you have a related party transactions, most government grants restrict any payments to a related party to those actual costs of the related party. So a related party cannot make a profit in most cases on the work they're doing or the cost that they're charging over. So if you're renting space from a related party, and the contract requires you to keep it at actual cost, you actually then have to look at the actual cost of that related party. The other thing we see a lot of times is with related parties is where a related party will, let's say a parent charges a management fee, and there's a management fee that gets allocated over to an organization. You have to look at what's underlying that management fee, because you could have non-allowable costs buried within the parent who isn't looking at things the same way that the subsidiary is looking at things, because maybe the subsidiary is funded by a particular governmental agency, which the parent is not. So you really have to be mindful of the costs and the allowable costs, not just at the level of the entity that's being funded, but if you have a parent entity that's driving costs down at that level too. If you have a fee-based program, and that's a program where you provide a service and you get paid for each unit of service, that happens within your Medicaid world, the focus is really going to be on compliance with regulations. Are you following the regulations that are in place? So before, when we were talking about cost-based, we were looking at documentation of cost, documentation of allocation methodologies, having proper supporting invoices and contracts and everything else. Here, when we're looking at a fee-based program, it's documentation of services. Do you have in place the proper log notes or case notes that are required? Do you have a service plan or a script that's in place? Because you have to have, if you think about the process, you have a service plan or a script that outlines what you're supposed to be providing. You provide a service, so there needs to be support for that service that was provided, a case note or whatever. That's supposed to be provided on the correct form, it's supposed to have all the proper signatures, whoever's providing it is properly credentialed. So all of those things need to be in place and in compliance with regulations. And that's when an auditor comes in and looks at a fee-based program, that's what they're basically looking for. And each funder has in place certain audit protocols. And if you go to the funder's website, you can find those audit protocols. And throughout the presentation, we'll kind of give you some links to some of those audit protocols so you have them. But it's going to be important for you to go and see what your funders are looking for. Go in, grab the protocols for each program, like OPWD. If you go to the Office of People with Developmental Disabilities, if you go to their website, you have all of the different audit protocols spelled out for you. So if you run any of those programs, your compliance officer should really have those audit protocols and your quality assurance staff and be testing your transactions against those audit protocols to make sure that you're doing everything the way you're supposed to. And then they're going to be looking to ensure that services were billed were actually delivered. You know, how do we know? What are we doing? How are we verifying? There was a case recently, and this is the second time it's come up within the last 5 years in the world of early intervention. And they've had instances where they had vendors who were providing services for early intervention providers who were not actually providing services. And they were billing for it, and Medicaid was paying for those services. And now there's a kind of an issue with this, and Medicaid is going to start looking at, or early intervention, I'm sorry, Department of Health, New York State Department of Health is going to start looking at some of these early intervention providers. So things that are happening within the industry could have a material impact on you. You could also have some sort of performance-based or hybrid program, where it could be a hybrid between fee and cost. There are certain programs out there that you get paid per unit of service that you deliver, like the CACFP food program. You get paid for each meal you serve, but you still have to track your costs, because even though you're getting paid for each unit or each meal you serve, if you don't spend all the money, that money is restricted. So you have to kind of look at it from that perspective too.
Mike, I see you have your hand raised. Did you have a question?
Yes, I did. Thank you. So let me preface the question by saying I have every intent and desire to comply with every regulation that every government funder wants me to. Okay. That said, I find some of the rules to be complex, and worse than that, arbitrary in the enforcement, depending upon which agency you're dealing with and who particular agencies you're working with. A lot of times I'll ask the questions, and 1 month it's good and the next month it's not good. I ask the question and the response I get is, well, look at CFR 200. Now, CFR 200, if I remember correctly, is hundreds of pages long and not written such that, and I like to think that I'm reasonably intelligent, I can't make heads or tails out of much of it. So you also referenced compliance officers. I don't know exactly who's on this call, but we're a $10 million organization with 50 employees and a 2-person finance department and no compliance officer. So I guess the question I'm asking is, how do we comply? Is there an easy, or is there some type of way, something practical so that we can ensure the compliance and understand what these regulations are?
This is not an easy process, unfortunately. And again, I mean, you understand why the government is doing some of this. Is because you're a public charity dealing with public funds, and they want to make sure that those public funds are being appropriately expended or used, and that if they're going to pay you, that you're providing the service. So you understand why they're doing it. And you're right, a lot of the rules are a bit onerous. They're hard to follow. You have to spend a lot of time focusing on the regulations, and the regulations change on a regular basis. The regulations are not static. The whole process is very fluid. As you said, you can call up and get one answer one day and a different answer another day. So it is very difficult. I mean, I think part of what needs to be done, if I can kind of give you a quick summary, and there's some of that is in here, but we'll talk about it now when it's relevant. First of all, trade associations are extremely important. Get involved in trade associations that deal with the funding sources that you're dealing with, because those trade associations are going to provide insight. There's going to be other people that you can talk to within those trade associations that have gone through things, who can give you insight and answers. You really need to stalk the websites of those organizations that are doing audits of your industry. Excuse me. So if your industry is a cost-based reimbursement industry, you can look at your funder who might be doing desk audits and looking at the costs. And then you would look at, get on their listservs, go to their website, look at that on a regular basis. The cost-based tends to be the state controller's office tends to do more of the cost-based audits. So you can look at some of the reports that are being issued by the state controller's office to see what they're coming up with, to see what they're looking at, and to see what findings they're having, so that you can compare that against what you have. If you're a fee-based, again, go to your websites of your funders and look. They should have audit protocols in place. It's not easy. There's no silver bullet that's going to get you to where you need to be. It's a process. I understand you're a small organization, $10 million, 2 fiscal people. If you can find the money to put some level of compliance person in place. Do you have a UA function? QA function, quality assurance function in place?
Yes.
So again, between the quality assurance, maybe you can have somebody do some aspects of compliance, or put together a compliance committee where maybe you're bringing in some volunteers. Maybe some of your board members can help with some of that. And it's not easy. There's no one answer here. As I said, there's no silver bullet. There's a lot of complexity to all of this. You're right. The rules go on for hundreds of pages. And if you are talking to one of your funders and they're giving you advice, print it out, or put it in a folder or a file that you have, so that becomes your support for if someone tries to disallow something later. You can say, I was following the advice. I was following the advice I was provided. I wish I could give you like here's a Reader's Digest version of how to do this. One doesn't exist. It really is kind of going through and looking at developing controls within your organization, because the tighter your controls, the less likely that there will be mess up somewhere along the line. But then that also requires you to have some level of oversight and review. So again, I apologize. I said a lot, but I don't think I answered your question.
No, you did answer the question. Unfortunately, the answer isn't, as you said, the silver bullet I was hoping for. But thank you.
Right. And I think what Ken is saying too, and you're going to see in some of the other slides coming up also, is if you think a little bit more like the way an auditor thinks, it will help you and sort of guide you. Once you kind of walk that line, in addition to trade groups too, there's training too that you may have to invest in as well. There probably will be some investment on the back end to really get up to speed of all the different regulations, understanding which audit groups are impacting your organization, and setting up systems. I think that's probably the key thing, is really looking at internally those internal controls that we have in place, and do we have the right controls in place, and do we have the right system in place, and can we make it better? So that's what we're going to try to walk through.
One of the other things you can also do is have a conversation with your external auditors. Find out exactly what your external auditors are doing from a testing perspective. And if there are things that they're not doing from a testing perspective, which you think should be incorporated into the audit from a risk perspective, and as long as it doesn't impair their independence, which again, I'm not telling you that you should be using them to be your quality assurance or your internal auditor, because they can't. But there are certain aspects of control testing that they can do that might be helpful to give you some insight into what they're finding.
Right.
So on a performance-based contract, the focus on the contractual terms. You have to actually read through the contract, figure out what it says. So if you have a vested contract or one that kind of looks at employment, You could have different performance standards. One is number of people served, percentage of people served trained within a set period of time. How many of those trained individuals did you find jobs? How many of them are still working 6 months later? So all of those performance standards come into play, and you have to make sure that you're tracking those performance metrics appropriately, and that you've got systems in place to capture that information. And as I said before, there could be cost components of some of this stuff.
And I think Jan had a question in there too. I mean, in line with Mike, about any advice for the really small, like the 1.5 million and under, and newer nonprofits participating, and how to stay on top of the audit system. I mean, we're going to provide some idea of how you can get there. Can you mention trade groups too? I mean, maybe there's other associations names that we could provide. I guess it depends on where they're funded by.
Yeah, I mean, if you want to throw into the chat, or if you want to reach out to us later and mention who's funding you, we might be able to give you an idea of some of the trade associations out there that might be helpful in terms of getting involved in. And again, what I like about trade associations and being involved in them is you have a lot of other people who are going through the same stuff you're going through. Some of them could be bigger and they could take you under their wing. You also have in there accountants and other professionals who kind of specialize within those particular funding sources. So that's always helpful. So who's actually going out there and doing the audits? Well, it could be the funding source. And the funding sources are doing both fiscal and programmatic audits. So they're looking at how you're doing things from a programmatic perspective and making recommendations and giving you corrective actions with respect to programmatic, or it could be fiscal. Each funder has specific rules and regulations, as we talked about, but they're fairly consistent in terms of what they're looking for. Rules can be program specific. As I said, they're outlined on the website, and they're interested in systems and controls. Some of the bigger agencies that are out there doing audits, the Office of the State Controller, the State Controller Office, they're out there. As I said, they're more focused on cost-based systems. So they're not really looking at fee-based programs the same way. They're looking at the cost-based programs. So if you're getting a program, I mean, some of the big ones that they've been doing audits of, they do audits of public schools. They've been doing audits of the preschool special education program. We've seen some family support contracts through the Office of People with Developmental Disabilities. So again, all of those are pretty cost-based programs. The main focus of the State Controller is they do look at governmental agencies, but in looking at those governmental agencies, they will dive down and look at some nonprofit organizations also. Right. When they go in and they look at organizations, they're looking at what's going wrong within those organizations. And they are capturing and trying to make recommendations for organizations to improve their overall controls. But as part of that, there is a recommendation for taking back of funds. We haven't seen a high level of nonprofit organizations being audited. Like I said, it's basically a few nonprofit organizations. It's mostly governmental agencies, but they do look at nonprofits. We did give you a link here. I'm not going to dive into it, but we gave you a link here to the details of the audit process. So if you are getting audited by the State Controller, this is a link to the audit process that they go through.
And it's also good to have that link. I use it too, because it's good to read a report, an audit report every now and then, to get an idea of, well, what are auditors writing about? I definitely, as Ken mentioned, stalk the website. I deal a lot with public schools on Long Island, and I find it to be a really good resource, to go and read those reports that they're writing about.
You also have the Office of the Medicaid Inspector General. They're interested in Medicaid billing and collections. Again, unlike the OSC, they're prominently concerned with fee-based programs because Medicaid is a fee-based program. So it's a compliance-driven approach. Are you complying with all of the rules and regulations? So while the OSC is looking at cost, the OMIG is looking at compliance. The OMIG does small samples, and that results in large recoveries. We'll talk about that a little bit more in a minute. And if you do get Medicaid funding in excess of $500,000, you are required to have a Medicaid compliance program in place, which gets certified on an annual basis based upon the anniversary of your license. So keep in mind that if you have over $500,000 of Medicaid funding, you have to have compliance, Medicaid compliance program in place. And then you have other governmental agencies. I know this is a Westchester group, but I know some of the organizations are in other areas. New York City Department of Investigation, just released a report in November of 2021. We'll talk about that in a little while. The Attorney General's office is looking, and counties are looking. A lot of the audits that take place in a lot of these organizations, they really come from complaints that come in, especially the Attorney General. The Attorney General's office is looking for complaints and inconsistencies and stuff like that. As I mentioned, the New York City Department of Investigation just issued a report in November. We gave you a copy or a link to a copy of that report. It's pretty extensive, and it does outline some of the recommendations for enhanced oversight by the city. And they focus on 5 agencies that the city outsources to. So it's DYCD, Department of Youth and Community Development, DFTA, Department of Health and Mental Health, the Department of Social Services, which oversees both the Human Resource Administration and Department of Homeless Services, and then also ACS, the Administration for Children's Services. So those funding sources are the ones that they're talking a lot about within this report. And again, this is a New York City report. Some of you may not be in New York City. I do recommend, though, that you do look at this report, because even though you may not be in New York City, New York City is kind of like the tail that wags the whole state's dog. So you want to make sure that you really understand what New York City is coming up with, because that could find its way into some of the other regulation that's out there. And really the big focus within the report looks at the budgeting process, it looks at invoicing, and it looks at auditing and compliance. So again, within there, they're talking about enhancing some of the purchasing function, looking at bidding processes, looking at executive compensation and possibly putting limits on executive compensation. After we finally got rid of Executive Order 38, they're now talking about at the city level, maybe doing something like that. Focus on conflict of interest and maybe looking at mirroring how the CFR certifications work with conflict of interest at the city level, ensuring proper budgeting processes are in place. They're looking at a big focus on outside contractors and a more rigorous review of larger expense categories. And then we gave you the links to the new policy and procedure manual that they put in place for cost principles in February of 19, and then invoice review policy they put in place in 12/20. So these are good resources that you can utilize in terms of looking at what you're doing and making sure that you've got proper controls in place surrounding them. A couple other things, not going to go deep into uniform guidance. The only thing I really want to bring up is if you receive federal funding in excess of $750,000, you're subject to uniform guidance, which is done by your external auditor. The only reason I bring it up is a lot of people got CARES Act funding this past year. And if you got CARES Act funding from like HHS, HHS, the shattered venue, daycare subsidy, FEMA, some of those types of federal CARES Act funding and other funding, that may put you over that $750,000 limit. So just take a look at it, because if you are, then you're going to have to go through a compliance related audit. PPP funds are not subject to this. ERTC funds are not subject to this. So if all you got was PPP and ERTC, you don't have to worry about this. But again, those CARES Act funding will be put on top of any other federal funds that you get, and that could trigger a uniform guidance audit. If you are subject to uniform guidance audit, then you have to follow certain compliance, and there's what's called compliance supplements. And we gave you a link to all of the compliance supplements so that you can go in and see what all those compliance supplements are. And then I'm not going to go deep into this either, but the Internal Revenue Service, it's not common for them to do audits, but they do have certain things in place where they will go in and do audits of larger organizations. If they receive a complaint from the public, they may do an exempt organization division wide where they'll combine with the Department of Labor and look at your pension plan and your organization. If they feel compensation is high, they have intermediate sanction rules in place. So, I mean, if there are inconsistencies between documentation, they may ask questions. So we just bring it up there to remind everybody that the Internal Revenue Service is out there, the Attorney General is out there, everybody's out there looking at you.
Yeah, just a quick question, I think regarding the single audit, about the federal funding, is it $750,000 a year, or can it be over a 3 or 4 year period? The
So what,
750. Sure, if the $750,000, what we're talking about with the single audit or the federal funds, if you get more than $750,000, is it per year, or is it like
it's 750,000 of expenditures within a year.
Within a year
is what triggers it. But it's not only just expenditures, because if you have a federally originated loan, that could also drive it if it's over the $750,000 threshold. So it's either $750,000 worth of expenditures, or it could be even if it's a federally originated loan that will go away after 20 years and it be forgiven after 20 years. During that 20-year period, as long as that loan is still sitting out there, then you would be subject to uniform guidance.
Right, and you can't spread it out over a 3 or 4 year period.
It's based on expenditures, so it's where your expenditures fall.
Yep.
And again, the uniform guidance, again, that is for all practical purposes, that's a cost-based. So it's really cost-based funding, not fee-based. So Medicaid doesn't trigger that because Medicaid's fee-based. So what are auditors looking for? Auditors, what you want to do is you want to learn, we mentioned this already, you want to learn from others' mistakes. Stalk the OSC, OMIG, and others' websites for audits of similar providers to gain insight into what they're looking for. There's a lot of them out there. It's really easy to find. You can kind of skim through the reports pretty quickly. If you are checking the state controller's office, you can sign up for the state controller office newsletter, which comes every Saturday morning. And you can sit there, having breakfast and read through the reports that are being issued. As I said before, documentation is paramount. If it isn't documented, it didn't occur. So for instance, if you're trying to document your payroll system, do you have job descriptions in place to document the job title or the program? You want to make sure those are specific. Do you have salary notices in the personnel files to show the salary that people are getting paid? Time records signed by the employee and supervisor to substantiate that the employee actually worked. That could be electronic signature or whatever, but you got to have that in place. Time studies, direct charges, allocation methodologies, if they're being charged to multiple programs or multiple companies. So, I mean, there's a lot of stuff that you need to make sure you have in place. And if that documentation isn't there, you're going to have a problem, because you can provide the best service in the world, but if you can't document that you provided it, or if there's information missing, they're going to disallow the cost. And then the other thing that I kind of recommend is that files should be orderly and consistent. You want everything to be easy to follow and easy to track. Yes, it's great to have an internal control environment, and the way by having everything orderly and everything organized, it makes the auditor feel a whole lot better. If I'm an auditor and I'm walking into an environment and I pick up 10 personnel files, and every single personnel file has in the front of it a checklist and things are checked off. This is in there, this is in there, this is in there. There are sections to the personnel file, so I can turn to different sections and know exactly where I can find certain documentation. I'm going to feel a lot better than if somebody hands me 10 files and stuff is just shoved into files anywhere, and I got to go flipping through it to find the stuff. So there's that whole perception piece that comes into play too. And as an auditor, it comes to that comfort zone. Am I getting a warm, fuzzy feeling from the information that you're providing me? So what triggers an audit? So there are a bunch of different things that can trigger an audit. Level and type of funding. If you're an organization with significant funding from a particular funding source, that could trigger an audit. If you have results outside of certain standard deviations, a lot of the auditors are doing data mining, and they're going through and they're looking at how things are being charged. This is big in the hospital world and nursing homes where they have coding, and they're looking for examples of where people are upcoding. Information inconsistencies, where data is inconsistent throughout a report or potentially sloppy. When was the last time an audit occurred? If they haven't done an audit of you in many, many years, you may just be up for the, for it. Program out of compliance. If program people come in and they're finding issues on a programmatic perspective, they may bring fiscal people in. Referral from another governmental agency. We had issues with a client, excuse me, where the client was being audited by the state controller's office. They found some stuff and they brought the state attorney general's office in. So it could be one governmental agency bringing another governmental agency in. We've also had instances where the New York City OG's office invited the state controller's office in. Self-reported or whistleblower incidents. If you think about it, you're supposed to, as part of your, if you are Medicaid funded, part of your Medicaid compliance is educating your staff, okay? And educating your staff as to what's appropriate. And you have to have whistleblower policies in place. Excuse me, and there's something called key tam rules. And under the key tam rules, if I'm a whistleblower and I report your organization and the government collects money, I get a percentage of the money that the government collects. So under the Medicaid key tam rules, you know, every one of your employees could be someone who could potentially report you as an organization if you're doing something wrong. You could have a high level of justice center incidences that could be driving things. Late filings if you're not getting your cost reports in on time. Or it could be some global issues that are happening, as I mentioned before, the 4410 special education world, pretty much every single 4410 provider is being audited by the state controller's office. And as I mentioned earlier, there have been 2 cases in the last 5 years with respect to outside contractors in the EI world. And there's been discussion that there will be audits of EI providers going forward. Shari, you want to talk about some of the findings that are out there?
Right, and this is something that I do recommend, and Ken has recommended this too. He just mentioned about reading audit reports that are out there. The OSC puts and publishes their reports out there quite often, and it's a good thing to kind of read up to find out what's happening in other organizations and take it, you know, to reflect back and saying, hey, could this possibly happen to me? Do I have the right procedures, controls in place to avoid this happening? And as Ken mentioned, also documentation is really critical here. If it's not documented, it didn't happen. And that's where it comes down to designing proper internal controls. So for these agencies here, you know, and what the good thing is that if you're looking at the dates on there, you're going to see what we mentioned earlier is that OSC is not really looking so much at specific agencies. They're really looking at the bigger governing bodies. But go troll on the website. We gave you the date. You could find out the exact agency here, and you can see the different types of funding that they had and what kind of recoupments that they're looking at based on the type of audit findings that they had. Biggest thing is that lack of documentation to support service delivery. It's really sad when we see this as an auditor going into an agency, and lack of appropriate time studies showing where employees work. Again, you know, you need to really define and track and have a mechanism to know where people are contemporaneously as it's happening, and have a system to ensure that documentation is properly maintained and is complete and accurate. By the way, that's the biggest buzzwords you're going to take away is completeness and accuracy. The New York agency that we have on there is an OASAS funded agency. That's more on the drug rehabilitation spectrum. Look, the number there of proposed recoupment. So this is going to be different when we talk about OMIG. There's another OSC one that we have on the next slide too. Unsupported, non-allowable allocated parent costs. Like in other words, people aren't putting the costs that are appropriate down on their documentation. They're charging for things that they cannot be charging for. Lack of time studies, again. The allocation costs, those are listed as what can be allowable and what can be allocated and how it can be allocated. Again, it's a lot of paperwork to read through and a lot of regulations, but it matters, you know, and working, I think, with your external auditor can help you to understand how to allocate those costs. Again, lack of vehicle logs, these are all documentation things. Property costs that are not allowable, those go back to, I guess, the CFR regulations as well. You know, it's really just an important thing to make sure that you have the documentation. Here's another one, December 31st. That was an interesting one too. That's an SED funded, state ed department funded agency on the special education. This was an organization that provides autism services. And again, you know, a fair number of findings there that led to a decent amount of proposed recoupments, just to keep that in mind. Again, the whole thing about improper allocation, you need to understand what can be allocated and how it can be allocated and what's an allowable cost. And again, missing documentation is just, it's just sad when we see something like that. And that goes back to your systems.
And again, missing documentation is probably going to be the most common that you find. Almost every audit has some level of missing documentation. Shari, you want to talk about the OMIG findings?
Yeah, OMIG is a little different. So I mentioned proposed before. OMIG is different. OMIG has teeth. OMIG can claw back and often does. And we've been in situations, we've had clients where OMIG walks in, they did not have proper controls set up. They did not have documentation. And they were just like, you know what? Can we just write you a check for $1 million? And we're not kidding. I mean, we had one agency that we came in after OMIG had been in there. In the first round they came in, they clawed back $5 million. Now, they were larger. They are an organization that provides amazing services, and they are been around for over 60 years. OMIG has been digging down. And as Ken mentioned before, there are there's a ton of information on audit protocols, and we're going to provide you those links later on in the slides that tell you how to do things. So, I mean, I guess I understand, you know, the Medicaid Inspector General saying, I gave you a full script of an audit program, you didn't do this. Well, there's reasons why you cannot have certain things documented. And you didn't have certain assessments done. You didn't make sure that certain people met the training requirements in order to oversee and provide those services. Missing personnel records, it's horrible to see that. But what they do is they take a sample, and then what they do is extrapolate. They absolutely extrapolate, and that is like the worst thing. So we can show you, they audited 100 claims. That was 1/10 that's 1% of all the claims. They had like an $8,000 pool that they were looking at. They can extrapolate that up. They just say, well, if that amount didn't happen, well, the rest of your whole population is going to be in jeopardy. We're going to deny. We're going to claw back and say, no, you owe us that money back that we gave you. So
if you look at, I was going to say, if you look at this one, there was 8,279 looked at.
Right.
They came up with, so what they do with the OMIG, they have what's called a lower confidence level, and they have adjusted point estimate. So what they're saying is they're pretty sure that the 634 is what you would owe.
Right.
And if you challenge them and you say, no, we're going to challenge you, they can collect up to 634. But if you agree right now, they'll lower it down to the lowest confidence level of $170,000.
Right. And I mean,
so in this case, they looked at 100 claims for $8,000 worth of total claims. Oh, I'm sorry, 8,000 worth of findings within the claims, and that
right.
netted to 170,000 on extrapolation.
Right. And it's really difficult, you know, if you don't have those good systems in place to basically go back and combat them and say, hey, no way. I don't know that money. We do have systems in place. And that's where, you know, we were talking about when we walk into an organization, we're looking at the files, we're looking at the way they have things set up, we're looking at communication. Those all tell us, you know, whether things are operating appropriately and efficiently and effectively. And that's really what internal controls is about. And this is just another agency, a Long Island agency. They just didn't have documentation. Again, they were missing the DAHAB. This is a Medicaid, you know, provider.
Yeah,
right, OPW, thank you. Couldn't get that acronym out. And again, this is something we see a lot. Certain services, like residential habilitation, that's very costly. There's a big fee associated with it. If you can't provide that kind of documentation, the numbers go up exponentially of what they can claw back. Again, they look at 100 claims. Now, remember, like if you're providing services on a daily basis to many clients that you're serving, you know, you have a lot of records, thousands of records there. So, you know, they're just doing a small snapshot there, and it could be the luck of the draw of the auditor. You know, it's happened to us too, where we pull a sample size and we just happen to pull all the bad ones. Well, that shouldn't tell the whole story there. And there's something else that I think we might want to mention too, is that, you know, when you have an OMIG file audit going on, if you're subjected to that, it's a good idea to make sure that you contact your attorney, your legal counsel at that time. And it's also a good idea to maybe have somebody else looking in background at what they're looking at too, to kind of get an idea whether they're coming up with the right assessment. We can get into that a little bit more. But a lot of the stuff that we're seeing here, these are just sad things about not having like a system in place to make sure that you have that documentation. You're taking the time, you're paying people, you're providing services. You should be making sure that you could get properly paid for those and compensated and do the right thing by having the documentation. That's where systems comes into play, maybe even an application system.
What we did here is we gave you, as part of this link here, this should be the OMIG last 5 years worth of reports. So you can kind of get a look at some of that, and there's a whole study. And some of the things that we have, like in 2020, the total cash recoveries by the Office of the Medicaid Inspector General were $561.9 million. A lot of it came from managed care.
Lori, it's Abby. I'm sorry, I was on mute when you asked that question. If anyone else had a question, has anyone else taken Amos Lane up on the ability to use local assistance money, either for workforce or for other, any unspent money for, in other ways than what the normal traditional monies are on the CFR. I did make an appeal to my regional office, and she first of all said it was fine for workforce, but then we have some, I wanted to know about other deficits. She said there were some restrictions having to do with an Article 28, which we're not funded for, and I don't know if there are any other restrictions. I don't know if anyone else has done this, so I just wanted to know, what if anyone's had any success or failures on this, so that I can learn.
I have to throw that one out to the group, because
He said they want to be as flexible as possible to be able to use whatever monies you have in your local assistance funding in other ways for the 2020-2021 funding. And I wrote to my regional office, and she said, yes, you can use it for workforce enhanced funding expenses, which is great. But then when I said, what about other deficits? And then she says, I need to know exactly what they are. And she mentioned some problems with some issues regarding, you can't do it for if you're getting Article 28 funding, which we're not. But I wanted to know if there are any other restrictions before I, go into all that with our regional representative.
So Ken, doesn't this go back to what you said at the beginning, that people should document their correspondence with anybody from the government offices? And if you ask a question, they give you a response, you have that in your file. I think
what I do also is, if there's a phone call conversation I'm having with a governmental office, I will send a follow-up email outlining, based upon our phone call, this is what I took out of our phone call. And if I don't hear back from you, I'm going to assume that my understanding is correct. I don't want to say, let me know if it's correct. I want to do it the other way, negative confirmation. If I don't hear back from you, I'm going to assume that my understanding is accurate.
Yeah, my correspondence is with my regional rep, but I'll send you that. That's the way to go, is through the regional office. And she said, yes, you could use it for workforce expenses, which is great. Since the other money could be either in 2021 or 2022, the money that they sent. So it gives a little more freedom, so that people should know about that. But I just wanted to know more about, what we are and we are not allowed to use it for, especially what, if anything, we're not allowed to use it for, so that we're clear on that.
That's something that we would have to, I don't have that off the top of my head. It's something we'd have to check the website or check whatever regulations on. So I apologize, I don't have a direct answer for that. But again, if you want to shoot the question over, we'll try to get an answer.
Okay. Yeah. It was on this meeting that when he spoke to us a few months ago that this I picked up on it.
So I think we look into that question, certainly, and we should definitely move on. I'm happy
Okay.
to answer questions. Please put them in the chat or raise your hand.
Thank you so
and I'll
much.
get to you. Sure. Okay.
Okay, so in terms of the OMIG audits in 2020, they recovered $562 almost $1 million. You can see kind of the breakout of those recoupments. And then in terms of, what drove the
Okay,
investigations, why did they
Thank
go
you.
and do the
appreciate
investigations?
it.
You can see also down below the most common reasons why, other state agencies, 20%, general public, people kind of sending in a complaint or something about an organization, or whistleblowers about 10%. So you can see, kind of what's out here.
Right. I just had another question in there about pre-COVID audits. So if OMIG has come in, have we had any experience with any of our clients that started an OMIG audit before COVID came down and then has not come back? I can tell you even before COVID, we had worked with an agency that I was telling you before. They first had an OMIG audit early in the early 2000s, took back $5 million. Of course, you're now on their radar. So they came back again and they hired us to come in to assess their internal controls, as well as they contacted legal to see whether this was going to happen again. And they performed the audit already, the second audit. And by the time we were getting them, this is still years, 3 or 4 years after, they still haven't issued the final report. So a lot of things are still in limbo, but that doesn't mean that they've gone away.
Yeah, we've seen other agencies, not just OMIG, we've seen other agencies who started audits, and during the COVID pandemic, they kind of went back and tried to finish up some of those audits that they had started years earlier. One of them was sitting out there for almost 8 years, and they issued it during came back and asked additional questions during the pandemic. So just because you haven't heard from somebody doesn't mean that you won't going forward. As we mentioned before, each funder has their own audit protocols. We gave you 3 of the big O organizations, OASIS, OPWD, and OMIG. We gave you links to their audit protocol pages, so you can kind of do that. As I mentioned earlier, joint funding source specific trade associations to keep abreast of audit issues, as well as changing regulations. There are a lot of them out there. And then understand who will be auditing you and what they'll be looking at. Again, this comes back to what type of organization are you, fee-based or cost-based?
All right, this is kind of more my thing, all about internal controls as an internal auditor, where we're kind of viewed as being somebody that assesses risks, goes in and looks at the different risks that can impact an organization and looks for ways to reduce those risks or reduce those threats. And it's all about your internal controls and about accuracy and completeness is what I mentioned before. So you're going to have accurate financial information, compliance with laws, rules, regulations, policies, and procedures. By the way, that is probably the lowest hanging fruit for an auditor to come in if you're not complying with your own policy. So that's another conversation to make sure your policies are really working for you and are not so restricted that you can't, if something unusual happens, you're going to be not in compliance with your own policy. Obviously, safeguarding assets, looking at the effectiveness and efficiency of your operations and your resources, and looking at accomplishing your objectives and your goals and your mission of your company. This is what's coming through from the Institute of Internal Auditors. That's actually where I got my certification. That's what CIA stands for, Certified Internal Auditor. Depending on how people feel about me, sometimes they come up with a different definition. And it's all about what you're going to see in those other examples that we gave before about those audits that we mentioned, missing documentation. It's about what's called the golden thread. So it has to kind of go through everything. All the information has to kind of flow through all your documentation, all the way from the very beginning, when you embrace that client, when you get that information, when you're hiring people, when you're providing services, to when you are billing it. Next slide.
I was going to say, if you think about it, establishing a strong system of internal controls is probably the best thing you can do. If you have proper checks and balances and everything in place, that's going to go a long way in ensuring or helping to ensure that when auditors come in, they're going to find less issues. So the internal controls is really, think of it as the foundation or the building block that you kind of focus on, because if you have poor internal controls, you're wasting resources, You have poor decision-making or can have poor decision-making. You can have areas of non-compliance in which then ultimately can result in government takebacks. So the stronger your internal controls, the less likely the problems are going to be.
Right. And that's where we kind of tell you what do these controls do for you. And again, looking at audit reports and reading them and understanding what people are getting, hit on, and then trying to internalize it and saying, okay, well, I need to make sure that I have these proper internal controls in place. And again, as an internal auditor, we're looking at effectiveness and efficiency of operations. Ineffectiveness, if things are sloppy, if things don't have a process, you might have resulting in people not wanting to do things and follow controls, lost money. It's all going to come down to money in some way, shape, or form. If you're ineffective, if you're inefficient, you're not going to be able to meet your goals. You're not going to be able to meet things properly. You're not going to be able to find ways to reduce costs. A lot of what our mission is about reducing costs and maximizing revenues. You want to make sure that your financial reporting is sound. It's extremely important for you to know, like, exactly how much money do I have in the bank? You have to think like those kind of questions. You want to be able to make good decisions based on the financial information, and it has to be complete and accurate. Compliance with laws and regulations and your policies. Again, this is part of the framework of looking at internal controls and doing analytics. I think can help you to say, am I missing something? I'm providing all these services. I'm paying all this money for payroll. Am I getting the money back from billing? You have to kind of like do those kind of assessments internally to ensure that you're getting all the anticipated revenues. And then if you're not, then you have to start peeling back the onion and going back and seeing, well, where did it get billed? Okay, what happened there? We had that situation at one of our clients where things just weren't making it to the biller. So it was just lost revenue that wasn't happening. And there's also, by the way, in some funding agencies, there's a certain limit of time that you have to be able to bill for certain things. So be very mindful of those aspects as well.
The other thing from a compliance perspective, one of the things that we find a lot is that, especially organizations that have a large number of contracts, who's responsible for each one of the contracts and who's responsible for ensuring compliance with each of those contracts. And that's going to be extremely important because somebody should be monitoring each contract to make sure you're meeting the terms within the contracts, because that's where you can get in trouble. So you've got these, multi funded agencies, and you just have to make sure that there's, proper controls in place in terms of who's monitoring the various contracts.
Right, and grants, especially grants if you have
Yep.
multiple grants, different grant time periods, regulations and restrictions and reporting requirements, that really has to be very well defined and understood. A lot of reading, a lot of learning and digesting it. And of course, that's a picture of my late doggy. And I use internal controls as, really kind of modifying behavior and why they're important. And we're going to be talking about tone from the top, not just at the top, but it really indicates, what is going to be an acceptable type of activity that can be performed. And that's where your policies come into place, because they tell people what they should be doing, and it's the expectation. Again, a policy has to be adhered to by everybody in an organization. So it's really important that, different people are watching you. We mentioned watchdogs, we mentioned whistleblowers. There have been a number of, disgruntled employees. We've seen things happen. We've seen malicious activity happen in audits, and you just, need to have the foundation there, as Ken said. Proper control environment. What does it look like? Well, documentation is really one of the things that you have to do, but you have to start with something as a foundation before you could just have documentation. You have to have some kind of policy and procedure manual. I'm old school. I go way back into the 80s where I started as a coder. You had to document what you were coding. And it's important to have all those, procedures at a granular level documented. There's been a lot of turnover. There's a big shift in retirements now. Baby boomers are retiring at a mass amount every year. You need to ensure that your policies and your procedures are accurate and meeting what is happening in your organization at this time. So we've listed a bunch of different accounting or financial type of fiscal policies that you absolutely should be having so that you can ensure that your financial operations are sound. So we talk about system of accountings, of records, of allocation, policies. Again, this is understanding what you're doing and who you're being funded by and how you can allocate those costs appropriately. Down to purchasing, we mentioned different things about purchasing. If you have to get bids or contracts or quotes, if you have a policy, make sure you can adhere to that policy. Travel reimbursements. I have a rule that no one person in the organization, if they leave, they shouldn't be able to take down the organization. And that's where you have proper policies in place and then procedures. Going through and making sure that everybody understands their role and their responsibilities, as well as in addition to keeping all these types of accurate records. So there's policies and then there's procedures. Policies are kind of overarching, approved by a board generally. Your procedures are really should get down to how we are doing things and making sure that we're doing things with proper oversight as well. It goes
and
on.
I think that also comes down to, there's also processes and controls. And a lot of times people think they have proper controls in place because they're doing X, Y, and Z. The controls are really the oversight. It's the segregation of duties. If you're a larger organization and have the ability to have those segregation of duties, where you have if you're dealing with payroll, let's say, where I have an HR person who puts the new employee and the rate of pay into the system, but doesn't have the ability to put time in. And you have a payroll person who has the ability to put time in, but can't put a new employee in. And therefore you got that segregation to protect you so that nobody can put a fictitious employee in, or if they do, that fictitious employee can't get paid. So you want to make sure that you've got proper controls in place, either through segregation of duties, which we just talked about, or through oversight. So if you can't do that in terms of checking to see if you've got fictitious employees through segregating the responsibilities, what you could do is you could have a controller of your organization who's responsible for looking through the payroll register every payroll period and making sure that all of those employees are real employees. If there's comparing it maybe to the last payroll, and if there's a new employee on there, making sure that that new employee has proper time records. If you know somebody was leaving and you had a termination form, was that person properly taken off the payroll? So you can put compensating controls in place to protect. Also, we talk about fiscal policy and procedure, but you also have to think about operations too. From an operations perspective, there are certain things, and we talked about it in grant monitoring and everything else earlier, but there are certain things you need to worry about from an operations perspective to make sure that operationally you're doing the right thing, because operations lead to fiscal. Operational shortfalls could lead to fiscal takebacks.
Right, and the same thing with compliance, not being compliant with the law, rule, or regulation, that can be a take back too. So on the next slide here, you put it up there also. Yeah, you're going to see more detailed policies that should be in place regarding fiscal, the allowable, non-allowable cost policy. I think that's probably going to be, one of your greatest strengths to get that memorialized. Related party transactions, capitalization policies, these are all really critical to a business function. It doesn't really matter, what we're looking at or where we are. We expect to have those kind of policies in there. As an internal auditor, I'm often providing sample policies to help them move along so that they don't, get stuck like a deer in the headlight. The other thing is to consider along with this. I mean, we're talking about segregation of duties, and Kim mentioned, someone in HR and someone in payroll should be, very distinct and unique. But we're using systems now. So just understand that there's also an IT component over all these things that are happening. And then usage of that IT applications that we're doing, there should be policies along with acceptable use of those policies. And also consider the environment that we just came out of, a hybrid environment, a remote environment. All those things have to be taken into consideration when you're developing your policies and procedures manual.
And when Shari was talking about non-allowable costs, one of the things that you might want to consider doing is, if you're going through and you're identifying non-allowable costs, either put them to a separate account for non-allowable costs or set up a separate cost center and put your non-allowable costs in that cost center so that you don't have to worry. I talked about audit protocols and some of the different audit protocols that are out there. So to give you an example, let's see if I can get this to work now. Can you guys see the screen?
Yes.
Okay, so this is the OMIG's audit protocol for DAHAB. And you can see in here, they've got, missing recipient records, no documentation of services, no diagnosis of developmental disabilities, on and on and on. I'm not going to go through this in detail, but again, you've got a really, really good kind of audit program to go through and make sure that you're compliant, and it tells you what exactly the government's looking for. So again, we do recommend that you go and you look at this stuff on a regular basis, and make sure that you know, any regulatory updates that you're aware of, check them on a regular basis to make sure that you're working with the most recent. And this is something that your quality assurance, your compliance officer, or someone else, even maybe a department head who, if you don't have the wherewithal to have separate people, but maybe a supervisor who's looking at this and maybe pulling a sample and saying, hey, does this all make sense? Or again, as I mentioned earlier, find out exactly what your external auditors are doing and what sort of testing they're doing.
Is
Some
there
of
a
the
site
other-
to, Ken,
Yeah.
1 second, is there a site to check compliance for non-medical nonprofits?
I think you have to look at your funding source. If you go to the funding source, I think that's where the best answer is going to be. So most of the time, your starting point is going to be your contract. So if you kind of think about the hierarchy of things, your starting point is always going to be your contract. What does your contract say? What are the terms within the contract? What do I have to do based upon my contract? Then it's, what is my funding source? How am I funded? And then who has the oversight responsibility? So again, if I'm DFTA funded or any DYCD funded or any of those, again, I'm going to look to my contract, see what my contract says, see if there's anything within the website there. But again, some of that, the audits are coming from either the counties or the city or whatever. So I'd look to see what they're doing. Some of the auditor concerns on fee-based programs. Shari talked about some of the stuff on the cost-based programs and making sure we got proper internal controls in place. On the fee-based programs, this is going to be more compliance-related type stuff. Make sure that your records are internally consistent. Are we looking at goals that are established within the service plan? Are they somehow linked back to the log notes that are being provided and everything else? The individualization of needs, it shouldn't be cookie cutter. I mean, we've seen instances where you have a log note and it's photocopied,
Yep.
From one log note to the next log note to the next log note with the date changed and somebody signing off on it, or, photocopied signatures, that stuff doesn't cut it. Not just interested in the process, also concerned with the linkage that exists between services and planned outcomes. I mean, we're seeing more and more from a operational perspective that the government is looking at impact. I mean, government wants to see that there's impact, proper impact that's taking place. As we move more and more also towards managed care, you're going to see also your managed care providers are going to be looking at impact. So that's also going to be important, and document issues encountered and how they're being resolved. From a statute of limitations perspective, documentation legally has a normal statute of limitation of, I think it's 7 years,
Right.
Is what your normal statute of limitation is. But you also have to be careful because some funders don't actually have a formal statute of limitations, so it could go beyond that 7-year period. If there's fraud involved or perceived fraud involved, that could go beyond the 7 years. So you got to be careful about it. Most of the time, they're not going back though more than 7 years to look at things. I mentioned before, movement to managed care for many providers working with, some of the long-term services that are out there. Movement to managed care could be rough in terms of being able to cut costs or to streamline the operations. So really, your goal should be to look for ways that you can control maybe the flow of services through the outside. So maybe instead of going to or having your consumers go to hospitals or going to clinics, you're looking, more towards that type of thing. But again, you're seeing more and more both on, the government reviews and with managed care. You really want to be creating progress within the individuals that you're working with, because if you don't, and you're not seeing a reduction somewhere along the line in services, you've got issues with maybe getting contracts or getting individuals on a go-forward basis. Medicaid compliance. So we gave you a link here. I mentioned before that the OMIG requires an annual certification. They changed the rules. You used to have to do a certification every December. It's now based upon your annual enrollment period, your annual anniversary. But if anybody does have more than $500,000 worth of Medicaid funding, I do recommend that you click on this link. This is the audit protocol that the OMIG utilizes with respect to looking at whether you have a proper Medicaid compliance program in place. And if you're certifying that you have a proper Medicaid plan in place and they come in and find you don't, that could be a finding under the False Claims Act, which I believe attaches with it a $50,000 penalty. So you have to be really careful about this. So 8 areas of review that they look at. They look at written policies and procedures. Do you have in place a documented compliance program? How are you identifying and communicating compliance issues? How does the investigation process take place? How is that resolved? Do you have a compliance officer? The compliance officer must be an employee of the organization. The compliance officer cannot be the compliance officer and also part of the system that they're testing. So I can't have a billing person also be the compliance officer, because as a compliance officer, I can't review what I've put in place. The compliance officer reports to the CEO and should have regular communication with the board. There has to be formalized training that occurs at least once a year. That training should happen with all staff, and you should be documenting that. If a staff person is absent, we do recommend that maybe you videotape the training and you provide that training to absent staff members, and they're required to review it and watch it and certify that they watched it. You should have attendance sheets taken to prove that everybody's gone through the training. You should have new staff and board training also that takes place. The board should go through some of the same training that the staff go through. If you have a new person that's coming on board, there should be orientation. Also, if you use outside contractors to provide direct services, your outside contractors need to go through the training also. There should be open communication with your compliance officer. People need to have the ability to reach your compliance officer. So there should be regular information, posting someplace conspicuous where everybody knows who the compliance officer is. They know how to get in touch with your compliance officer. They have the ability to report something anonymously if they want to. And whatever the issues and stuff, they should know where to go. There should be formal disciplinary policies in place to encourage good faith participation. Discipline needs to be fairly and consistently applied, so it doesn't matter if you're upper level management or a low level staff person. And discipline also has to be applied whether you're the person who committed we'll say a fraud or some act of inconsistency, or you turned a blind eye to it. So if you knew it was happening or you discovered it and you didn't say anything, you're just as guilty as if you did it yourself. One of the biggest places where we see people fall on their face from a Medicaid compliance perspective is the whole aspect of risk assessment. We're firm believers in that, at least on an annual basis, a risk assessment should take place, and that risk assessment should be updated on a regular basis. I mean, things change within your organization, things change outside of your organization. All of those things affect risk. You have new staff members, changes in policies, regulatory changes, IT changes, new software applications, new regulations that get put in place. All of those are things that are going to impact your overall risk, and those are all things that you need to take into consideration. So you're required to do a formal risk assessment, document that formal risk assessment, and you're also required to do formalized testing. So there should be testing that's taking place within those areas of risk that you identified as part of your risk assessment. You don't have to test everything every year. It could be cycle testing, but you have to go through a process of testing. you identify that testing should be well documented. You identify what your findings are. You determine who the responsible person is going to be, who's going to be responsible for implementing change. There should be a formal corrective action plan that's put in place, ongoing monitoring, follow-up testing, and everything else to make sure that controls are properly being handled. You should have systems for responding to compliance issues. If you find if someone reports something, you should have systems in place to actually take that very seriously. What happens if somebody reports a problem? Who's going to be the person who's going to be going through the procedures to verify that things are being done appropriately? So that really needs to come into place. You should also have what happens if you find a problem and you need to self-report. What's the process there? That should always be set in place. And then you should also have a non-intimidation, retaliation, or whistleblower policy that basically says if you report something and you do it in good faith, that you're not going to be held responsible or you're not going to be retaliated because you did. You want to encourage people to report if there's an issue. Everybody knows about the Justice Center. I'm not going to go deep into the Justice Center here. Just want to make sure that people understand that, when we're looking at risk and we're looking at, your compliance programs and stuff like that, you have to consider also reporting to the Justice Center what needs to be reported and what the ramifications are in terms of reporting. The other thing to keep in mind is when you are looking at things, you're looking also for systemic issues. If I have a lot of issues happening at a single location, that could mean either maybe my staff at that location need to be better educated. It could mean that maybe my building is old and people are tripping over stuff because there needs to be repairs or stuff made to a site. So, when you're looking at it, you have to pinpoint some of that stuff down. I know I'm talking fast, but we got about 4 minutes left and I got about 2
Right, and
slides
she
left,
just
so-
needs a couple of minutes to wrap up at the end.
Okay. Finally, a compliance committee. I mentioned it earlier. I think every decent sized organization should have a compliance committee in place. It should include department representation, compliance officer if you have one, audit committee or board members, somebody from your quality assurance. If you have someone within your organization that has a legal background, you want to include all these people into your compliance committee because, again, compliance looks at risk. And you want to make sure that you're considering all of the areas of risk within your organization because risk is where you can kind of fall on your face and where you want to make sure that you put controls in place to mitigate that risk. What should be the focus? Again, as I said, risks within the organization. You should do the annual risk assessment that remains fluid throughout the year. Look at internal and external factors, testing and monitoring, changing regulations, all the things we talked about that the compliance officer is supposed to be doing. And then from a communication perspective, obviously the board is where the governance takes place. So there needs to be that communication with the board and the audit committee, and I would say at least on a quarterly basis. So they really understand what's happening within the organization, where the risks lie, what is the organization doing to mitigate some of those risks. That information would be summarized and determine what the potential impact of some of this stuff is. Proper follow-up and reporting, develop appropriate corrective action plans, because those corrective action plans become a way that you can use to educate and train your staff as part of the annual compliance meetings. So you really want to make this a living, breathing process so that it continues to help you to get better as you move forward. So certain things to keep in mind. And this was something that was kind of mentioned before, but keep lines of communication open with your funding source. And if you're communicating with your funding source, document it, make sure that all of that communication is that you're keeping all of the supported responses. Develop formal quality assurance protocols and compliance programs in place so that all of that stuff is working effectively. On the QA function, quality assurance function, make sure the quality assurance people have checklists. They know what they're doing. They're reviewing things appropriately. You want to assess risk at least annually and test areas of greatest risk. Stock your funding source websites. Stay involved. Get on the listservs. There are certain software applications you can use within your quality assurance component that are actually out there that They do self-checks, they scrub your claims and stuff like that. So take a look at some of the software applications that may be able to cut back on some of the manual time that you're spending. And then this is us. And it's 10:29, so you got a minute to wrap up, Jen.
Wow, thank you. Thank you so much. I'm just laughing because you could always have a career in speed talking where people can understand you. This was so informative to me, Ken and Shari. You provided information. I've been in the industry for a very, very long time, decades, and there are tools that I'm walking away with that I never knew to do before, and little tips.
I was gonna say, and if people have questions, please just reach out to us. We're more than happy to answer any questions. I know we don't live in the nonprofit sector, but we live in the nonprofit sector. This is a key component of what we do, and we really, really honestly care about the sector. So.
Yeah, and I will reiterate that Cerini is a wealth of information and resources, commitment to the sector, and all kidding aside about the speed talking, you both were clear, concise, and extremely informative. So thank you. We thank you for being a platinum sponsor of our organization as well, and for all you do for the sector. We just look forward to working with you more and more in the future. So thank you both.
Thanks a lot, Jen.
And
Appreciate it.
everyone who's attended, thank you as well for the work you do. We're forever grateful and humbled to serve you and to represent you. So thanks, everyone. Have a great rest of the day.
Stay well.
Thank you.